So traders, in this video, we're going to be talking about bubbles, crashes, and master time frames, and why it's so important to understand this if you actually want to do well out of trading. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into today's video. Today I've got a really exciting educational video for you today because I want to teach you about the psychology and the way these markets operate and the way these markets work. If you're new to these markets for the last sort of maybe 2 years, one taking this, I just took a drink. And you're trying to get a bit of a gauge of how these markets work, then this video is going to be really helpful for you. One thing you'll start to see is that when you're looking at stock markets and you're looking at crypto markets or silver, gold or mining stocks or any market out there really, when you look at charts, they create formations, right? And they really create a lot of different formations, but you know, different charting patterns. They go in uptrends, downtrends, and so on and so forth. And the beauty thing that I love about reading charts is that it gives me a really good gauge on where are we right now. Are we in a bubble territory? And if so, generally crashes, big long-term crashes, come from when? Big long-term crashes come from big massive bubbles. So if a market is going to crash, so to speak, you would then generally see a very big long-term bubble. Now, crash can be thrown out there, but just remember, guys, that a crash, if you look at a technical word crash, a crash doesn't happen one day. It takes over 1 year. So if you're looking to trade today, I'm trying to pick the top for the crash. Why? One, it may not be the top, and two, crashes take 1 year, 2 years for the whole thing. So if I say the word crash and I say, "Oh my goodness, the market's going to crash and it's going to take 1 year it's going to take 1 year to happen," or from when it starts to crash to finish the crash, it's going to take 2 years. See how that does to me, right? When I say that, it doesn't come together. It's like market crash, and when it starts, it's going to finish in 2 years time frame. What? Really? See what I'm saying there? So, but there are different times, like if I bring up, say, the cryptocurrency, there are different times when the market starts to go vertical. And when the market starts to go vertical in any market, that's when you want to be, you want to be very cautious. So if I squeeze my chart up here, you'll know back in 2018 what actually happened, right? Look how vertical this chart went up. If I bring this back to here for a minute. Right, as you know, we went up to 20,000, but look how vertical this chart went up. It just absolutely skyrocketed, right? You can see how vertical. It went from a very nice bull market to bubble territory. And what am I saying here is this. So as you can see, right, a nice move up and then a nice pullback. That's what the market does. When you see this, beautiful. For you guys are watching this right now with the miners and metals, guess what? That's what the miners and metals are doing right now. Beautiful, right? Because it's in a beautiful bull market. Yeah, and then look what happened. Very nice move up and then a very nice pullback again. To my moving average, which is just the 52 moving average. Anything special about that? No. Use a 60, 50, doesn't matter, right? Just a longer term moving average. But look what happened then. We went from a beautiful bull market to, oh my goodness, see the differences? That's bubble. This here, really good example. But this here is beautiful bull market. Beautiful bull market. Uh-oh. If I had this level here, bubble. And look what happened. We end up doing what? When the market does that, we inevitably come down and retrace a lot of where it actually started. And as you can see, it actually went through there, and then we actually started to make a big move down through there as well too. And we actually retraced all that through. So as you can see, when the market starts to create really nice, beautiful higher lows like this, it's in normal bull markets. Then when the market bubbles, that's when it's likely to crash. I'll give you guys another example of, obviously the miners and metals. So if I look at the the SLV here for a minute. Let me bring up a blank chart. I'm going to bring up, let me bring up a monthly chart. And as you can see, look what happened here on a monthly chart basis. Silver, this is the SLV, but the silver, look what, silver just absolutely exploded. Now, whenever you see a market that's doing this in the moment, the big problem is that you never know when the bubble's going to end. But you know the bubble's going to end and there's likely to be a crash happening afterwards. So, what goes up really, really quickly comes down really, really quickly. What goes up very nicely, that's what's exciting about miners and metals right now. You can see, I'm laughing at that, right? Because a lot of people, when we're going through these pullbacks, they freak out. Oh my goodness, it's a pullback. Oh my goodness. It's like, guys, relax. It's okay. But when the market starts to do something like this, like silver did, like absolute big vertical spike, guess what? Now we've got to come back down again. If I bring up my good old GLD, same sort of thing, right? Look at this here. We went from a beautiful bull market to beautiful like bull market, nice move up and then nice little sideways move, nice move up and a nice pullback, and then went for a nice move up to like just keep going up, just going up and up and up and up and up and up and up, and then we went sideways, and then now we actually did what? And now we actually pulled back, and now we actually pulled back to retrace most of what we actually started here. So some could actually even say that this actually could be a bit of a bubble here. It's not exactly a bubble, but you can see, right, that this is the whole territory that actually goes on through when the market starts to make a very, very, very big move to the upside. So one of the big things, guys, with bubbles, the first section of this video, which is bubbles and crashes, is when the market starts to go vertical, just like I shared with you Bitcoin, just like I shared with you SLV. It's time to start getting really, really worried, guys, or at least start to really ratchet up your stop losses if you are in there. So if the market does come down, you get stopped out for a profit and you protect yourself. That's at least that there. So make sure you keep an eye on that. Now, master time frame. One of the worst mistakes that a lot of people do is when they're actually looking at the charts, they will look at the daily charts, say, let me actually bring up any chart, it doesn't matter, you know, SILJ, right? The SILJ. And they'll look at the daily charts, and that's all they look at. The last sort of maybe, you know, most people only look at the last sort of maybe couple of months, you know, and that's it. But, you know, but then some people might only look at the last sort of maybe 6, maybe 12 months, you know, maybe over the last 6 months or 6, 7, 8 months, maybe longer. And this is all they see. Now, the reason, but the big problem with that is, as you can see, look at this here. The market, this SILJ chart, as an example, ran up from 11 up to $7. But hang on a minute. How come this point right here? How come this point right here, the SIL dropped, the SIL stopped from a nice big bull run, and then we started going through a bit of a pullback. This is just a very, very, very nice pullback here. It's a nice pullback, guys, because we're going through a very big long resting phase, and so the master time frame is always that weekly chart. If you're not looking at that weekly chart, you're missing a lot of it, because a lot of people are thinking, oh my goodness, we're going to keep going up. But if I bring up my weekly charts now, actually, you know what? Let me do this. Let me blow this up. I want to actually, you know what? Let me actually duplicate this for a minute so I can share with you. I'm going to put this to the right. So let's do that through there, and I'm going to make this right chart the weekly charts. All right, I'm going to squeeze my weekly chart up just like so, and I'm going to make my daily charts here, just so you can see what's going on here. All right, cool. Now, look at this. If I go back to this chart here, if I'm looking at this chart, and if I'm watching this thing go up and up and up and up and just keep going up and just keep going up, and for some reason it stops at 17, well, like, why did it stop at 17? But if I look at my weekly charts and I draw some trend lines here, you'll notice that there's a major long-term resistance line. If I bring this level up through here, there is a, as you can see what's going on there, but we're just trying to come back here. You can see this major resistance up here. The reason why the market kept going up, a little bit pullback and up and up and up, and it stopped right there was what? Because of the master time frame and what actually happened here. Resistance up here, and resistance up here as well too when it comes to that $17 level. So you can see that $17 level was that long-term massive resistance line before we got what? Before we got some sort of a rejection point on there. And so this is really, 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 really crucial, and the same for the SIL as well too. The exact same thing. Look at this weekly chart over here to the right. I know it's squeezed up, but look, we ran straight up. How come we stopped around the 52 to 54 level? Well, look at this here. If I actually bring up some trend lines, you actually can see that this whole support level back here on the SIL, this whole weekly chart, all these support levels back here, and this major resistance one back here, which is that major high point, guess what? That's going low right there. So as the SIL was getting into here, we're actually going for a nice move, and then suddenly we stopped. And now we're going for a pullback. Why did it stop there? Because that weekly chart is creating major resistance. Now, this is not a guaranteed to stop the market and reverse it. So you can, I know some people thinking, oh my goodness, if that's the case, when the market does that, I'm going to buy put options or I'm going to short the market. No, right? No, it's just if you're looking to buy the market, this is the worst time. It's a very low probability time because the markets respect these long-term major support and resistance lines. So always keep an eye on that master time frame, which is the weekly charts, and look at those long-term levels of support and resistance levels, just like here, because they do come into play. So say, for example, this point up through here, when silver does continue up over the next 4 or 5 years, whatever, at $75 level, guess what? When it gets there, we're now likely to have at least a move up and then a bit of a pullback. And then maybe we go for a run and then break it. You know what I mean? So that's what's going on through there. So guys, this is all about bubbles, crashes, and master time frame. Hey traders, John Howell here. Thanks for watching my video. For a limited time only, I am giving away free access to my brand new trading course. I've put all my most powerful systems, strategies, and trading techniques that I've learned over the last 15 years and put it in this course, and I'm giving it away for free for a limited time. See, in this brand new Go to the Markets by the Board trading course, and you can get it when you go to johnsfreegift.com, you're going to learn, firstly, you're going to get access to a brand new training course for 90 minutes, and you're going to learn all the details step by step to my #1 trading system with over a 90% success rate that works on any market and any time frame. You're also going to learn 3 powerful chart reading and trading techniques. You're also going to learn 2 more powerful trading systems, and also you're going to learn 7-figure trading secrets, mindset techniques, and so much more. There's top 13 mistakes you're going to learn, the 10K per month formula, and so much more. No, this is not a get rich quick scheme, but if you are struggling with your trading right now and you need help, then for a limited time, you can get free access to this. So go to johnsfreegift.com right now, or click on the very first thing in the description, because for a limited time, I'm giving away. So go to johnsfreegift.com right now and start getting access to this full complete trading course, plus also the free training with my #1 trading system with over 90% success rate. Go do that right now, and I'll see you on the next page.